Hello, this is Jim McKeith, and welcome to this Embarcadero Technologies presentation on Delphi and the blockchain. There's more than just Bitcoin and cryptocurrency, although we will talk about that a little bit as well. Real quick about me, I'm the Chief Developer Advocate and Engineer here at Embarcadero Technologies, longtime software developer. My claim to fame is I invented and patented the swipe to unlock back in 2000 something. I don't remember when it was. 2001, 2009. I forget. You can look at the patent number there. 6766456 is the first patent for a system for authenticating to a computer system, drawing geometric shapes with a pointing device. Well, a line is a geometric shape, and that's what you're doing with swipe to unlock, is unlocking the system. A little bit more about me there as well. I host the podcast at Delphi.org, where you will be able to find the code from this as eventually. So this is our agenda. We're going to talk a little bit about cryptography as well as cryptocurrency in general. I'm going to introduce you to Bitcoin and Ethereum. It's probably two of the more popular cryptocurrencies. I don't know, it's hard to say. Bitcoin is definitely the most popular. It's one you've probably heard about the most. Ethereum is definitely a very interesting cryptocurrency going on right now. Ethereum is a blockchain. Ether is the cryptocurrency, but we'll get into that later. But we're going to talk about digital contracts. Then I'm going to show you some APIs where you can track Bitcoin prices and other prices. I'm also going to introduce you to PascalCoin, which is just kind of a novelty, I guess, probably. But I'm saying that. I'm sure the people involved in PascalCoin think it's a much bigger deal than that. But I'm introducing it for the interesting sake that it is built in Pascal. Talk about mining, proof of work, overview of blockchain. Then we'll build a blockchain chat application, and we'll also talk about some other blockchain usages like digital contracts. So this is the basics of cryptography that you need to know to follow along with what I'm talking about here. You probably, hopefully already know this. If you don't, definitely do some more research. And actually that goes for everything I'm talking about here. I'm just giving you the tip of the iceberg. So you're going to want to make sure you do some more research in order to really understand this, and especially if you're planning on building something that you want to be secure with all this. So a public key cryptography, which is what most cryptography today uses, is asymmetrical. That means you have two different keys, a public key and a private key. The public key, everybody can know that, and that's used for encryption. So anybody can know your public key and they can encrypt a message. But once that message is encrypted, the only person that can decrypt it is the person with the private key, and that's you. Private key is used for decryption. A cryptographic hash, on the other hand, is a fixed size thumbprint. So you take any size input, whether it be one word, 1 byte, 1 bit, and run it through cryptographic hash. It produces the same size output every time. So usually with cryptographic hashes, the input's larger than the hash, but it doesn't have to be. For example, SHA-256 is a 256-bit thumbprint. The algorithms are designed to prevent collisions. A collision is where you have two different inputs producing the same output. Now, because you can have more inputs, right? If you counted all the way from 1 to 257, or 1 to the maximum value you can have in a 256-bit number, and then counted one more, you would have to have a collision because there just cannot be that many. 256 is a very big number, which we'll look at in a second here. The SHA algorithm is designed, it's very secure. It's one of the most secure cryptographic hash algorithms. If you're using MD5, that's not considered secure anymore. SHA-256 is what Bitcoin uses and what a lot of other systems use today. A digital signature, on the other hand, is when you take your private key and encrypt a hash. And then anybody can then prove or validate that you encrypted it by using your public key to validate that. All right, so this is a way that you can do something. You can sign a document. Basically, you take the document, you hash the document, you apply your public key to that document to sign it, and then somebody else, you apply your private key to that to the hash to sign it, and then somebody else can then validate that you, in fact, created that signature, and then validate that the document hasn't been changed because the hash is the same. And then that's a way you can prove that you wrote the document, for example. Delphi has a SHA-256 algorithm support, at least in the latest versions. I'm not sure when it was introduced, fairly recently. You can find that there in the system.hash function. You look for thash SHA-2. So how exactly big is 256 bits? The number of values you can have on a 256-bit number is 1.15 times 10 to the 77th. Okay, so that's the odds of collision of two different inputs is 1 in 10 times 10 to the 77th, 1 followed by 77 zeros. If you put one more value in there, right, if you hashed 10 to the 78 values, you would have to have a collision. It's required. Now, that's a really big number. For a comparison, the number of atoms that make up the Earth is roughly 10 to the 50th. And the number of years left before the heat death of the universe is 10 to the 100th. So it's halfway between those, which are both astronomically large values. 10 to the 50th is about 167 bits. So each bit doubles the amount of values you can have. So that's kind of gives you some idea of how big 256 is. And they are working on, actually Delphi has support for as well, 512-bit hashes. So they will move to that eventually, I guess, if they need to. So what is a cryptocurrency? The idea predates Bitcoin. It was originally electronic cash, and they used smart cards to hold value. It was basically an idea as an alternative virtual electronic currency, a way to exchange value without using cash or a credit card or something along those lines. There's been lots of attempts at this in the past. None of them have been very successful. They either required some central authority, which caused, they could then arbitrarily assign fees, or it just wasn't maintainable, didn't work, wasn't secure, etc. Interestingly, so they use encryption to protect the value, but crypto also means hidden or secret, as in protecting the value and identity of transactions. So crypto kind of has two meanings there. Bitcoin was the first decentralized cryptocurrency, meaning there's no central authority, which I think is really what was necessary to make cryptocurrencies work. That way you can have transactions between an individual, and there's no central authority that controls those transactions. So this was an interesting diagram I found, the taxonomy of money. It's called the money flower. It kind of looks like a flower there. If you look over there, you can see in the middle, I just circled cash and cryptocurrency, which are very closely related. The difference being is cash is issued by a central bank, whereas cryptocurrency is not. And that's really the advantage of cryptocurrency is it was originally created, which we'll talk about, Bitcoin, right after the fall of the big central bank bailout in the United States, where the federal government, Federal Reserve, decided to bail out these banks, which caused deflation in the money, caused some economic troubles. So the idea about cryptocurrency is the Federal Reserve can't change the value of the cryptocurrency of Bitcoin. Right? Bitcoin is independent of that. It's peer-to-peer, so you can make a transaction between somebody else without having to swipe a credit card and bounce it off of a server and create a transaction that way. It can also be anonymous. So those are some of the differences, some of the things that make up cryptocurrency. So Bitcoin was designed by the pseudonymous, anonymous, I'm not sure the right way you pronounce that, but Satoshi Nakamoto, claimed to be a middle-aged man from Japan. Turns out he didn't exist. Interestingly, he was active in a forum online and published these papers and published the source code, and it was all released open source. And then eventually they discovered he didn't exist. So kind of an interesting, seems almost surreal story in that regard. You can find the original white paper there at bitcoin.org/bitcoin.pdf. And basically the idea is you have these distributed miners. Miners are nodes in this distributed network, and each miner maintains the blockchain. The blockchain is the transaction letter with proof of work timestamps. So proof of work means that they've done the mining, which I'll talk about here in a second, to prove that they obtained that Bitcoin. You obtain a Bitcoin when you complete a block, and completing the block is what adds a item to blockchain. A block is completed every 10 minutes, like I said, and generates 1 Bitcoin. And then transactions are in Satoshi, which is one very small portion of a Bitcoin. So that's the smallest amount of Bitcoin. So Bitcoins, as of today, are like $11,000, but you can see the Satoshi is a very small portion of a Bitcoin. That's the smallest amount you can have. I think it's 8 decimal points, if I remember correctly. Looks about right. And that's so you can have a small transaction. It doesn't have to be a full Bitcoin. Individuals use a wallet to access their Bitcoins. Now, a wallet doesn't hold Bitcoins. Bitcoins are not, there's not a serial number or some physical element you can hold in a Bitcoin, but instead they are a record on the blockchain that indicates you own the Bitcoins. So your wallet is your digital credentials. It's your private key that you use to authorize transactions of the transfer of Bitcoins. Okay, it has a unique identifier that identifies your wallet, and somebody can send a value to that wallet. They don't know who owns the wallet, but you can say, this is my wallet, and they can send a value to that by signing the transaction that you then receive that's posted to the blockchain. Mining is the process of finding a nonce, which is a number used once, or a unique number, a sequentially generated number in this case. And that nonce is used in the block to generate a hash meeting the current difficulty target. So the difficulty target is changed every 2 weeks, which is roughly 2000, actually it's changed every 2016 blocks, which is roughly every 2 weeks, considering the target is 10 minutes per block. So as more nodes are added to the network and the network gets faster, they recalibrate this in order to keep the block generation at roughly 10 minutes. And the reason for that is so that, it has to do with the way the algorithm is set up. Some of the other cryptocurrencies have a smaller window for block transactions, but also they don't want to generate too many blocks because that would deflate the value of Bitcoin. But at the same time, they want to have it frequent enough that it's useful for you to have a transaction. So the way what that means is if you have a transaction, if you post it to the blockchain, after 10 minutes, then that block has completed. And then 10 minutes later, the next block has been added. And once the next block has been added, that next block points back to the hash of your block, which I'll explain the blockchain in a second. And then that means your block cannot be changed. So Bitcoins exist as the result of transactions on the ledger. So like I said before, there's no serial number for a Bitcoin. The reason you have Bitcoins is because the ledger says you have Bitcoins. The computation requirement, the amount of effort your computer put into generating a Bitcoin, is called proof of work. Now, one note, it's not, if you sit down with your computer and tell your computer to mine, you're not going to produce a block in 10 minutes. Okay. All of the nodes in the Bitcoin network will produce 1 block in 10 minutes total, all that computation power. There's some news articles saying that like most energy in the world is being put into mining Bitcoins right now. It's just crazy. This is the reason you can't buy high-end graphics cards right now. Everybody's buying them to use them to generate Bitcoins. And so the effort required to compute a block and the structure of the blockchain, which we're going to talk about in a second, is what secures the ledger. So the blockchain contains a hash that points to the previous block. So you can't, if you change the previous block, you have to regenerate the next block or all subsequent blocks. Now, because it takes the entire network 10 minutes to generate a block, if one individual or one group of individuals or somebody with a bunch of computing power tries to go around the blockchain by generating their own blockchain, they can't have the computational power. So the more nodes get added to the network, the more secure it becomes because of the effort required to circumvent the blockchain. So what is the blockchain? When there's no central ledger, because Bitcoin is distributed, how do you know which ledger is true? So for example, if I have, a ledger in my checkbook that says that I received 10 Bitcoin and I've not spent it, and you have a ledger that says, I sent you 5 Bitcoin, which is true. And that's where the blockchain comes in. It's a way to create consensus for the ledger, to know someone's not repeating a transaction. So repeating a transaction will be where I send money to Dave, and then I send 5 Bitcoin to Dave, and then 5 Bitcoin to Sue, and then 5 Bitcoin to Rob, and then 5 Bitcoin to somebody else. But I only had 10 Bitcoin to begin with. So I've spent more Bitcoin than I had. But I've repeated that transaction, right? I've said, oh, these are the same 5 Bitcoins. So the blockchain solves this as each block contains the hash of the previous block. So that what that means is I can't go back and modify a block. Once I have a transaction that says I spent 5 Bitcoins and that's on the blockchain, and the next block gets added to the blockchain, if I try and spin that again, they're going to go back and say, well, hold on, Jim. We see in the blockchain you got 10 Bitcoins in this block, in block 5, and then in block 6 you spent 5 Bitcoins, in block 7 you spent another 5 Bitcoins. You can't spend another 5 Bitcoins because you're out, right? The ledger, it adds those values up and says, that's it. You're not able to spend anymore. So you can think of a blockchain as a singly linked list that uses hashes instead of pointers. So as a programmer, we know what linked lists are. It's each node in the list has a pointer to the previous node. Blockchains go the other direction, though. Actually, no, I guess it doesn't. The hash points to the previous node in the list. The very first block in the blockchain is called the Genesis block, and it doesn't have a hash, or the hash is a fixed value, a known value. And so the way consensus works is in case of a disagreement, right? So if there's two blockchains that are not in agreement, the longest blockchain wins. And because of the effort required to add the next node to the blockchain, it's really difficult for somebody to, that's what I was talking about, being able to outrace the current blockchain, the main blockchain. So because of that, you can't circumvent it and you can't come up with your own chain. Now let's talk about Ethereum. So Ethereum is an open source public blockchain based distributed computing platform featuring smart contracts. So it's not a cryptocurrency. The cryptocurrency is called Ether, and it's generated by the Ethereum platform. But what Ethereum is set up for is the idea of being able to execute these smart contracts, which are scripts that execute on the Ethereum virtual machine, or EVM. This is a decentralized Turing-complete virtual machine that runs on the blockchain. What that allows you to do is create a smart contract. So you write a script that looks for some criteria to be complete. So for example, I say, if the stock goes up to this amount, then I will transfer you X amount of Ether by this date, for example. So the blockchain, the smart contract runs on the blockchain, on the Ethereum virtual machine, which is on the blockchain. And once those criteria are met, that transfer takes place automatically. I can't change my mind unless there's some function in the script that allows for that. So what this means is I can have a contract set up that will execute irregardless of a central authority, irregardless of laws, irregardless of anything. Once that contract is in place, once I can put that script there, you can look at that script and you can say, yes, this script, right? Instead of reading legalese in a document, instead you read the script for the contract to know how it's going to work. And it's right there. There's nothing to circumvent it. On the Ethereum platform, it uses gas, which gas is a term for an internal transactions pricing mechanism. They use that to mitigate spam and to track resources. Ethereum is really interesting because it does this smart contracts thing. Definitely take a look at that. I think this is an example of the future of the blockchain. Now, if you want to find out Ether, I guess, and Bitcoin prices, I said Ethereum, but it's technically Ether is the currency. Here's some APIs for you. The first one here is CoinDesk, and it it only does Bitcoin. It gives you Bitcoin to a number of different currencies, and you can check out there. You just add the that URL you see there, api.coindesk.com/v1bpi current price.json, and put that in your REST debugger or your REST request, and you set the JSON root element to bpi.us dollars, and they'll give you the price in US dollars. If you see the documentation there, it tells you how to get the price in other currencies like Brazilian real, or get access to historical data. If you want to get other cryptocurrencies, check out cryptocompare.com/API. It has tons of coins, and you can get, like, for example, what is the current price in Bitcoin in Ether, right? Or what's the current price in Bitcoin in Ether, US dollars, and Brazilian real. It has a lot of different things you can do. One note though, is the coin list API is huge because it lists all the coins. And by all the coins, I mean, there's a ton. You cannot believe how many different cryptocurrencies there are, and they list all of them there. And I was having issues with the REST debugger being able to process that into tabular data. Just to be aware of that. I didn't actually try putting it into an application, so maybe it's something about specific to the REST debugger, but it was very, very slow, and I ended up not using that one. But here's the example API here, min.-API. That bottom line will get the current price of Ether in US dollars. I said Ethereum there, but Ether is the cryptocurrency. I know better. So also I want to tell you about Pascal Coin. Pascal Coin is a cryptocurrency developed in Free Pascal. Some of the features they claim is it has infinite scaling. What that means is they only keep track of the last 100 blocks of the blockchain. They call that the flow instead of the full history. So what that means is they're doing a really high transaction rate, over 100 transactions per second. And so that could represent an incredibly massive blockchain. But instead, they only keep track of the last 100 blocks. And they say that's enough to know the current state of the ledger. And so they can tell if where all the coins are. They also support assets, subtokens, and smart contracts. They do have a wallet available for Windows and Linux, but not on Android and iOS yet. So this is why they should have used Delphi, because then they would have it on all the platforms from one code base. But I had to throw that in there. I like Free Pascal fine, but if they use Delphi, they would have them. You could check out the current price there using the Crypto Compare API. And this morning I tested it. It was $2.58 for one Pascal coin. So let me look at an example blockchain. And actually I'm going to, I guess I have to hit escape. So I've created a spreadsheet here. And this hash is calculated. Let me zoom in here so you can see this better. This hash is calculated based on this row. Okay, so this is the Genesis block. Each row represents a block. And when anything changes the Genesis block, all the future ones have to change. So this one doesn't validate the blockchain, but it shows you how the hashing changes take place. So if I change this node here, say Genesis block, and hit enter, you see it had to go through and recalculate all of these. And so Google Sheets tried to be smart and calculated them in random order, but when it calculated some of these down here first, but then when this one recalculated, it had to keep going, and so it went through and did it now. So if I change some of the data here, here's some more data, period. So very small change. And you see all the blocks had regenerated, and they're very different. So you can see CEA0F, take the period off. I guess that's the previous one. That's the weird thing. This hash represents this block. So E18725 is what it starts with. I put the period there, and it's completely different. One note is that the data doesn't have to be all the details. It can just be hashes of other details. And what that means, what that allows you to do is once something's on the blockchain, if there's a hash on the blockchain or a signature on the blockchain, if I've signed something on the blockchain, just put the signature on the blockchain. And then later I say, here, this is a a document, or this is something I invented, and I have a document that describes my invention, and then say, and I did it on this date, and you're like, I don't know that you did it on that date. I can say, oh, look, on the blockchain in block 2 is the hash for this document. Therefore, this document existed in this state on that date, and the date timestamp is right there. So then I can prove that it existed on a specific date. That's one example of blockchain usage. So let me show you a Delphi version of this. Actually, I will at the end. I'll do all my demos at once. Anyway, so that's kind of the basic ideas. The hash is of the previous row. So if this row changes, keeps it secret, period, then this row down has to recalculate. Okay, and I included the hash of this row here, even though there's no block for it technically, just to show that there is another hash of the current row. Oh, so now it's demonstration time. Let me do the demonstration. I guess that makes sense that I put all the demonstrations together, right? This first example is essentially like the Excel one, but has the ability to validate the blockchain as well. So if we run this, I have some values in here. The Genesis node, the Genesis block, sorry, I keep saying node, but it's block, is a fixed known value is the idea. So this hash should always be the same. Every time this application is run, if I recreate the block chain, it's going to be the same because this hash matches the Genesis node. So those are hard-coded values. Then in here, each additional block, so this next block is the hash is row block 1. This hash is of block 2, etc. So now if I hit validate, it says valid blockchain. If I come here and make a change, so if I add a period here and then hit validate, it says, whoa, number 2 has a hash mismatch, so number 1 was changed. So therefore we know that the value was changed. So I'm going to revalidate it. Now in this case, this isn't distributed, so I can come in here and put a period there. Oops. Put a period at the beginning. Oh, well. And hit force recalc. You see, notice it went through and regenerated all the hashes, and now it is valid again. And that's because it's not distributed. There's nothing to prevent me from doing that. What we can do here is that you can take this hash, though, and persist that. Okay, so you can save that off someplace else or back that up someplace to the cloud, or you give it to post it to an API or something along those lines. And then later, if I come back and change this data, then it will say, well, that's invalid. And so therefore, I can prove to somebody else that I've done something, right? So that these blocks all existed, everything existed when I posted that. So I've given that to somebody else, and then they can come back and then prove that this data, all this data hasn't changed because I gave them that one hash. So this doesn't have dates and times. Dates and times would be useful as well, and a way to timestamp things. So if you are doing have a transactional nature in a database, for example, you can use a blockchain types format to timestamp that stuff, or keep track of that log, and then store those hashes off the database. And then if someone comes in and tries to get in the database and change things and bypasses all your security because you're a good database administrator and you set things up correctly, and they get past all of that still and make a change, you can say, whoa, 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 these values changed because I have this one block stored off site and I know these values change, and so therefore I know it's invalid. So that's a situation you can use blockchain to make sure that the data, the entire ledger, the entire list of data, all the blocks are unchanged by storing just that one value there. Now, this doesn't use, the first example, like I said, doesn't use a proof of work. It doesn't have mining. So this is an example of what mining would look like. I didn't show you the code in that. Let me go back and show you the code. Simple blockchain. So the validate code, what this does is it goes to the first record in the mem table, and it gets a string, which is all the rows, all the values in that row, each value in that row, and generates a hash. So in system.hash, the t hash SHA-2 defaults to a 256-bit hash, but also supports other size hashes up to 512-bit. And so get the hash of that, and then we go to the next row in the table, and we then look at if we're not at the end of the row into the database. Okay, so if we haven't gone past the end, and the hash doesn't match, then we say it's got a mismatch. So we say the row we're on has a mismatch. The previous block was changed, and exit. And we do that until we get to the end of the database. The validation or the recalc is very much the same, except we store the hash. And it's important here that you check to make sure you haven't hit the end, because what will happen is when you get to row 9, so you calculate the hash of row 8, or I'm sorry, block 8. Getting my terms, my jargon mixed up here. You calculate the hash of block 8, and you go to block 9. Okay, so we calculate the hash of block 8, we go to block 9, and we edit it and put that update the hash and post it. And then we go through again and calculate the hash of block 9 and hit next. Now next is going to try and go to the next one, but there is no next one, which would set the EOF flag. But if we don't check for that, then we'll update 9 with the hash of itself. And that will say, whoa, hold on. Block 8's been modified because the hash in block 9 doesn't match that. So that's why you have to check here for EOF before updating it. Because if it's EOF, then you've gone past the end and you're trying to put 9's hash back into 9 in this situation. And that's it. That's all there is really to it for the blockchain. So let's go back into the miner example. So this is an example of what mining might look like. So this is the block data. It could be anything. It could be JSON. It could be XML. It could be binary data. And it could be hashes of other things. The idea here is whatever value I put in here, when I hit mine, it's going to look for a difficulty of 1. So that means it's going to mine until it finds a hash that begins with 10. Okay, so you see it took 6 attempts to find that. So the nonce of 6 is the next nonce for this block. So whatever this block is a fixed value, and everybody's looking for the hash, the nonce that creates a hash that starts with 0. All right, and so the idea in Bitcoin is that it takes the entire network of nodes 10 minutes to find the next hash. So let's go up to a difficulty of 2, and I hit mine, and you see, look at that, it jumped from 6 to 281 attempts. So nonce 281 generates the hash we're looking for with 2 zeros. Now, there could be, it's within the realm of possibility that there is another hash that has 2 zeros, right? So somebody else might find a different value with a different nonce, but that's the way the blockchain, the Bitcoin and the blockchains autocorrect for that, if that happens. That's more complicated, but you can look into the white paper for information on that. So let's go to difficulty of 3 and watch how much this jumps. It's going to take actually quite a while. Oh, 926. Faster. So it took a lot longer, 3 times as long for adding another difficulty, but still it wasn't exorbitant long. And I can go up higher again. We'll go 4, and this one's going to take a while, more than immediate, as it were. I should have updated this after it cleared. There we go, it finished. So it took 22,000 attempts to find one with 4 zeros at the beginning. Okay, so that's an example of what mining might look like. We'll look at the code here, and what the miner does is it goes through, it gets the hash of the nonce appended to the front of the block. So this is the block, is the memo1.txt, and we'll put the nonce as a string at the beginning. It could be a binary data, so you don't have to do a string, but I just do a string for simplicity. And we add that to our list box, increase the nonce, and then check to see if that matched, or if we got matched the difficulty. So we look at the substring of the hash based on difficulty. So we start at the first index, this is index 0, and look difficulty digits in. So if it's 4, we take the first 4 characters, and we compare that to a string of character filled with zeros, difficulty long, and find out if, in fact, we have a match. That's it. That's all there was to it in this situation. Very simplified version, but just kind of give you an idea of how that works. So now we're going to take and build a blockchain chat. So this doesn't use proof of work at all. What this does uses the idea that if you reply to my chat, then we add that to the blockchain. So all I have to do is, if you reply to my block or reply to my chat, then I know, I have proof, I have acknowledgement that you received it. So let's run this. And we'll launch the tester. Now, there's some existing nodes in here because I tested this earlier, but that's okay. We're going to go ahead. Oh, we better validate this. Valid blockchain, valid blockchain. Oops. I forgot to reset it. I better reset it. So I have a batch file here that just resets my files. So now I can run this. I could have put a button in the application itself to reset it, but let's launch the tester because that was one that was invalid. Valid blockchain. Okay. So now my blockchain just has the Genesis block in it. So let's send a message. Hello there, test. And I hit send. Oh, I have to connect. I didn't put code in there to check to make sure I was already connected. My bad. Okay, hit send. Hello there, test. So what happened here is I sent to the remote machine my index. It's going to create a problem. Yep, validate, mismatch. So because that I had a node here that didn't exist. See, I didn't make my code robust enough. You know these things. Check your connections, check to make sure this works. And then when you're doing these simple demos, or when I'm doing these simple demos, I don't do that, unfortunately, sometimes. And I make stupid mistakes like that. All right. Let's try this again. Connect. All right, we're connected. So, and it's empty, so I'll validate. Valid blockchain, validate, valid blockchain. So I have the Genesis node. So I'm going to say, hello there, test. Hit send. And so what happened here is I sent an index of 1, my message, which includes my name, and the hash of the previous block. And the previous block is my Genesis block. So on this end, I received that and stored it in the database. And if I validate, then yep, that's correct. Now, if I sent a response back, thanks for the message, Jim, send, then here I've received this hash back that proves that that block was there. So if instead of actually sending a hash, if I did a digital signature, right, which is a signed hash, then I would know that I received the message from test because I could validate it against their public key and know that that they have this message I sent them before because I can validate this. So let's validate this, and I can see that's valid. Valid. Now, if we come in here and they change the value, all right, and validate, then it's invalid. Let's see. Actually, let's do this. I will change. Let's change this back. Make a more interesting example here. Thanks for the message. All right, let's change it to say, what are you talking about? Question mark. All right. And now I respond and say, didn't you get my message? All right. And I hit send. And now on this end, I can validate and I say, whoa, hold on. 3 has a hash mismatch. Number 2 has changed. I come and look. Number 2 has changed. So now I know that they modified either that my message didn't go through successfully, or they've modified their ledger on their end, and I know that it's invalid. Okay, so we have this check back going on now, and we can know if at any point our conversations have been compromised, whether it was malicious intent, man in the middle attack, whether it was someone on the other end modified their ledger to say, oh, I'm going to pretend like I didn't receive this message, or I'm going to pretend like this message had a different value or whatever. We can then validate that and go all the way back to see where it happened, when it happened, etc. So let's look at the code here real quick. When we send it, I'm just creating the message is the name and the memo text. I guess I should put that as a separate block in the record. So the record, so I create a block here. So the block is an object, find, that has a data, which is the message, a hash, and an index. And so we display the message here, and then and I put that in the database. So I should put this after. If I put this here after this, right, then if this fails, I don't store it. See, that would have made more sense. So create block. I gotta go look at this one here. So create block. What this does is it goes to the data log, which is the FD mem table I'm using, and it hashes the last record in it. Okay, that's all I'm looking at is the last record. Hash it, get the index of it +1, and then I create a block that has the new index, the message that I'm sending, and the hash of the previous one. Okay, and then I go app tethering send, and I'm just using the JSON to string to serialize that JSON as a block and send it. And then I insert it in my database after. See, I fixed that now. And then the validate process, it's the same as we looked at before. We start at the first node or first block, and we get the hash of that row. We go to the next block. We compare. If it's not in the file, we compare the values. If it's wrong, then we raise an error. In this case, it's just show message. Otherwise, it's a valid blockchain. So there you go. That's it. That's a simple example of using blockchain to validate a chat stream. So this, like I said, is just the tip of the iceberg. Blockchain is an emerging technology, very, very early. I was talking to a friend of mine that's in law school, and she asked if they'd litigated around any of these smart contracts. And I said, I don't think so. I think it's really still very early in the stages of this. There's been a lot of news going on with Bitcoin and cryptocurrencies, but everybody's still caught up in that gold rush. I think blockchain is going to have the bigger, longer impact over Bitcoin. So it's blockchain's what made Bitcoin work, and I think blockchain has the potential to outshine Bitcoin in the long run once everybody gets past this gold rush. You can check out the original white paper there, bitcoin.org/bitcoin.pdf. And then for more information, there's a few links for you there. Bits on Blocks is a blog that has a number of articles in there that look pretty good. Ethereum, if you go to ethereum.org/greeter, that tells you how to create your own smart contract, a bot that lives on the Ethereum blockchain. And I'll be posting my code on delphi.org, so stay tuned there for more information. So yeah, the Bitcoin network is so big that it is not it's conceivable, but not practical that somebody could overpower the Bitcoin network, that they would have enough computing power to do that. Now, some of the other blockchains out there that are smaller networks, yeah, if you had the amount of computing power, like if you took Google and Amazon, you probably could overpower those. I don't know if they have safeguards in effect for that, so you definitely want to check out what they have documented about that. Let's see. What are miners actually doing? So miners are calculating hashes. They're hashing blocks of transactions. So all the while people are calculating hashes on block 5 or block X, the next transactions are accumulating, right, over that 10-minute period. And then X+1
once the block for X is hashed successfully, they find the hash that meets the difficulty requirement. Then X plus 1, they take all the transactions that occurred during X and bundle those up, and then they start trying to find the nonce that will create the hash that meets the difficulty requirement for the new set of transactions. All right, and so that takes 10 minutes for that hash to be discovered. So for 10 minutes, transactions accumulate. Then for 10 minutes, they look for the hash that will meet the difficulty requirements. And then the 10 minutes after that, they're working on the next block that then seals, if you will, the previous block. So you're looking at worst case scenario, 30 minutes if you wanted to make sure the transaction was completely secure. So then there's a question here, if my computer calculates a hash and deposits it in the miner's pool, how is it validated that it didn't just fake some hash? So that's the purpose of the wallet. The wallet is a private key. So everybody, in order to access their Bitcoins, they have a wallet, and that wallet is essentially a private key. And you cannot transact somebody's Bitcoins without a signature from that wallet. So really a wallet is like a digital certificate. It's a private key that is used to sign your transactions. So in order to transfer your Bitcoins away, you have to sign it with your private key. And then everybody looks at your public key and says, oh yes, look, in fact, this transaction was signed with Mark's private key. So therefore we know via Mark's public key that he authorized that transaction. Is there a forum or place dedicated to Delphi blockchain? I am not aware of one. Certainly, if you're interested in this, you could start one. Maybe look around. There is one. Someone pointed out earlier there is a Delphi port of the PascalCoin wallet. So, although the wallet is really it's an application that interacts with the blockchain. So wallet has two terms. Your wallet is your key, but it's also the program you use to interact with the blockchain with your private key. So anyway, there is I'm not sure where that's at, but someone mentioned that earlier this morning. So if you Google it, I'm sure you probably can find it. So I didn't really show an example of the wallet. Wallet is a function of blockchain, or it's not necessarily a function of blockchain, right? So there's a lot of different technologies that come together to make Bitcoin work. Blockchain being one of them, wallet being one of them, the mining being another one of them. So I had an example of mining, I had an example of blockchain, but I didn't really get an example of a wallet. But a wallet would be a private key and a program that uses that private key to create transactions. And actually, I should have the bitcoin.it up there as well. That's another really good, that's the main, the official Bitcoin wiki. So a lot of good information there. Lots of thank yous. You're welcome. Thanks. I'm glad you appreciate it. Okay, so the cost of mining a Bitcoin. That was when audio was muted. So the question is computing power and what the miners are doing, I guess. So there is a computing cost based on your electricity consumption. And there are specialized hardware, specialized ASIC hardware used in Bitcoin mining. Some of the other systems use algorithms that do not favor ASIC hardware. So depending on the algorithm works better on different types of hardware. The ASIC hardware is specialized for Bitcoin mining. So for Bitcoin, the serious miners are using ASIC hardware. The moderately serious miners are using GPUs, high-end GPUs, and then everybody else is using just their standard CPUs. And I guess you could do it. You could mine it on a Raspberry Pi or your Android phone or whatever as well. So, but the amount of power consumption, the power to computation equation changes in there depending on what kind of hardware you're using. Now, the article I was reading said that it is still profitable to mine Bitcoins. Although if you're interested in Bitcoins, you can also just speculate and buy them low and sell them high through an exchange. You don't have to mine them. So there's lots of options for how to be involved in Bitcoin from an investment point of view. where do you get the private key for the wallet? So to get the private key for the wallet, you generate that. That's your system generates a private key using the system for the cryptographic function they're using. I'm not sure if it's RSA or elliptic curve or what they're using. Probably RSA. That's pretty standard anymore. And you generate a private key on your system. Sometimes most computers these days have an entropy gathering subsystem that collects random data that is used to seed a random number generator, a pseudo random number generator. Although if you have the actual entropy gathering system, then you're usually able to get true random numbers, although it's still fairly pseudo, I guess. Anyway, then it uses that to generate. So with RSA is based on you generate two large prime numbers, and then you multiply them together to get another number. That the two prime numbers are the private keys, and then the public key is the product of those two large prime numbers. And then the strength of that is the fact that it's very difficult to factor numbers. Essentially, you have to go through and try every possible combination. There are some shortcuts, but it's very difficult. Quantum computing is changing that. But anyway, that's what the basics of RSA. So if you're doing RSA, your system would generate two large prime numbers, multiply them together. The product is the public key, the original prime numbers are the private key. There's some other subtleties to it than that, but that's the basic idea of it. So you would generate the private key. And then your public key would probably be signed by the network to show that you've shared it. Both sides would maintain log on tab 2. Yes, so in my example, the chat system, and both sides do maintain that. They each saves off that log, the data log of all the transactions. And so if you don't save it off, then you don't have the ability to validate the incoming message. And also you can't, well, I guess you can only reply, right? So if you don't have an existing message and the other person does, then when you send your message, you would have the Genesis node or the Genesis block, and they would receive it and say, whoa, hold on, you sent me an invalid chat. So it only works if both sides have the history. So your wallet is your private key. Well, your wallet has both your public key and your private key in it, but your address, well, okay. Your wallet has, so you give people, when you give people your wallet, you're giving them your public key, but your wallet also contains your private key that you don't give people. Okay, so it's a loaded term, if you will, but your publicly visible portion of your wallet is your public key. Privately visible version of your wallet is your private key. Who finances the mining? The mining is financed, so the people that are mining, that are running the blockchain, get bitcoins, 12.5 bitcoins, when they successfully mine a block. So they're being financed by the algorithm that I think it's like 2140. The way that Bitcoin's set up is that the number of bitcoins provided for each successful block is halved every so often. And I think it's 2140. It will no longer be generating more bitcoins. So the number of bitcoins will be fixed at that point. Actually, be reduced because occasionally people lose their wallets, and then they lose those bitcoins as bitcoins disappear. In theory, you could find the wallet again and be able to revitalize those bitcoins. But then at that point, there'll be transaction fees. So people could, basically what would happen is you would, when you have a transaction, you would say, and I'm willing to pay this much transaction fee. So it would be, some small fraction of a Bitcoin as a transaction fee. And then the miners would then take, the ones that have the highest transaction fees would be more likely to be hashed in the next block, if you will. So by transaction fees, you increase your the speed at which you are hashed. Eventually, all of them would get hashed, I guess. I'm not sure exactly the details on that. Check out the white paper. test Bitcoins from a faucet if you're interested in building a wallet or mining software. Oh, that's really cool. I didn't know that, Dan. So Dan says there's a test network that you can test Bitcoins. So certainly a lot more information. This is really like a picture of the iceberg there, tip of the iceberg. There's so much more to this, and I'm certainly by no means a complete expert on this. Right, so the ledger, the blockchain ledger contains the history. Now, your wallet, your software could cache that information, right? So it could say, hey, this is what I know is your current balance. And then whenever you create a transaction, it could then increment and decrement that. So it could maintain its own mini ledger, but the ultimate authority ledger is the blockchain, which is distributed. So you would, in theory, have to walk the entire blockchain at some point to validate everything. It would seem, and I know Pascal Coin does this, it only uses the last 100 blocks, but it would seem that you could have a some sort of way of indexing, not indexing, but creating a snapshot, right? And then use that snapshot. So I'm not sure if that's built into the Bitcoin blockchain or not. Definitely take a look at that. Who determines the difficulty level of mining? The algorithm does. So that's the thing about Bitcoin is the software. It's basically like a big math problem. The software itself has the rules in place for how this works, and some of those rules are about determining the difficulty. So every 2 weeks, roughly, it looks at how much time it took to generate the last 2 weeks worth of blocks and adjusts the difficulty to keep that at about 10 minutes per block. And so that's done automatically via the algorithm. In theory, I believe there's a way for the software to be updated, but it requires nodes to adopt it. Occasionally you do have forks. So they had a fork a while back. I didn't get into this from Bitcoin to Bitcoin Cash. And that's where the blockchain forks and people adopt different algorithms going forward. So again, read the white paper or the wiki for more information on that. But I know Ethereum had a fork as well. There's Ethereum Classic is the old Ethereum network. There was another Bitcoin network that they abandoned. So there was something happened and a large amount of coins were stolen from the network because some wallets were compromised. And so they decided to fork or rewind the blockchain. The entire network decided to, or most of the network did, rewind the blockchain and fork it in order to reverse those stolen coins. I can't remember what network that was, gosh. But then some people, for example, the people that stole it are like, no, we want to keep these coins. So not everybody went with that fork. And so it forked at that point to correct an issue. So that's possible if you get enough buy-in from the network. You could fork it for various reasons, whether it be changing the algorithm, whether it be correcting a bad block, etc. Oh, was that Ethereum that did that? Okay, so Eli's saying that it was the Ethereum network that did that, and that's where Ethereum Classic came from. Can't remember if it was Ethereum or a different one. Ethereum has some interesting stuff going on. You may have heard about CryptoKitties, which is this collectible cats that you can trade via the Ethereum network. And so it's an example of using smart contracts, and you trade Ether to get these cats. And then once you have cats, you can trade cats with other people's cats and try and get the full set of cats. And each cat's unique, and you can breed cats. And I don't understand it completely, but it's kind of like Pokemon, except it's cryptographic, cryptocurrency powered kitty cats. And I guess just recently they launched Crypto Celebrities, which is like Crypto Cats, except it's celebrities and you buy stock in celebrities essentially through Ethereum. I don't know. Anyway, there's lots of stuff going on in Ethereum, these smart contracts. A friend of mine that's in law school, and she asked if they litigated around any of these smart contracts. And I said, I don't think so. I think it's really still very early in the stages of this. There's been a lot of news going on with Bitcoin and cryptocurrencies, but everybody's still caught up in that gold rush. I think blockchain is going to have the bigger, longer impact over Bitcoin. So blockchain is what made Bitcoin work, and I think blockchain has the potential to outshine Bitcoin in the long run once everybody gets past this gold rush. You can check out the original white paper there, bitcoin.org/bitcoin.pdf. And then for more information, there's a few links for you there. Bits on Blocks is a blog that has a number of articles in there that look pretty good. Ethereum, if you go to ethereum.org/greeter, that tells you how to create your own smart contract, a bot that lives on the Ethereum blockchain. And I'll be posting my code on delphi.org, so stay tuned there for more information. Okay, if you have any questions, go ahead and put them in the question panel here and go to webinar, and I will get them answered for you. There is one question, a few questions here already. Brent's asking if everybody gets a Bitcoin for attendance today. Unfortunately, no. You get 12.5 Bitcoins for attendance today. No, just kidding. Sergio pointed out that it's 12.5 Bitcoins that you receive for completing a block, not one, which is correct. I was correct in that there. I was trying to provide an overview, and there's a lot of details that's easier to get bogged down into, and it's one of those things. Every time I try to think of the right angle, I kept leaving parts out. The source code is not available for download yet, but it will be available at delphi.org, and I will include a link with the replay and stuff like that as well for where you can download the source code. There's a question here if the mining that I'm doing here uses the GPU or the CPU. So the code I was showing there all uses the CPU, but there is libraries available for Delphi that do allow you to do computation on the GPU. Just wasn't what I was using for this, just using regular CPU stuff. For Bitcoin and other cryptocurrencies, most of those will run on either the GPU or the CPU. Currently, most Bitcoin mining is being done on the GPU, and that's why you can't buy high-end graphics cards right now, is because everybody's snapping them up to mine for Bitcoins. Question here if there's an example of proof of stake versus proof of work. So I was showing proof of work. Proof of stake is another concept around the idea, another way of proving who does the next block in the blockchain based on ownership. So there isn't really, I don't have anything like that. The research I've done shows it's kind of a emerging idea. So blockchain itself is emerging, but proof of work is what most systems are currently using. Proof of stake is this new idea of a way that doesn't involve using a lot of CPU processing power to produce the next block. Let's see. I am working on a proof of stake STEAK that involves a T-bone, though, that you cook on the GPU that's being used for cooking, the GPU that's doing the proof of work, and it's producing a lot of heat in there. I can use that to cook the steak. Let's see. Where is the blockchain stored for Bitcoin? So the blockchain is distributed. Every node that is mining Bitcoin stores the blockchain. So the blockchain doesn't contain. So yeah, every node that's mining the Bitcoins has the full blockchain on it. Now, you can also have the blockchain elsewhere if you want to have the ledger without having the mining, but all the miners do hold the blockchain. Frank points out proof of work is increased only by how many 0 digits are at the beginning of the hash? Oh, it's asking. That's my understanding, is the difficulty is basically looking for a hash that is under a certain value, which means it is prefixed by a certain number of zeros, if you will. So the way Bitcoin mining works, and how you know you've found the nonce that is correct, is that when it meets that difficulty requirement. All right, so it's like I was showing, it's going through a sequence of nonces, and it's generating it so it's like, this is the current block. I'm going to hash the current block with a nonce, a sequence of nonces, of random numbers or sequential numbers until I find one that meets the difficulty requirement. And once I find one that meets the difficulty requirement, then I know I found it. And so that nonce is my proof of work because I have the nonce and I generate the hash, and everybody else can then prove that that hash, like say, oh, I've got the hash, and everybody else can see, oh, yes, he does have a hash that works correctly. And so they know I have the proof of work and I have the nonce. And so then I generate the next block, and then I receive the reward that be based on my proof of work. I don't have any comments on proof of stake algorithms, unfortunately, Roland. There's not a lot of information on them yet. Any serious consensus on that I've seen as far as the best way to go. The ones I have seen still seem like not an ideal situation, in my opinion, but it's still emerging. It's still a long way to go. Is there a Delphi library for generating a wallet, creating transactions, and broadcasting them to the blockchain like libBitcoin for C++? There may be. I don't know, Sergio. You could certainly use some of the C++ blockchains from Delphi or libraries as well. You don't have to be using, it doesn't have to be written in Pascal. You could have wrappers around those libraries. So lots of possibilities there. Delphi has all the cryptographic libraries or anything like that that's necessary for those libraries. So if they're not there written in Delphi already, you could certainly write them. Just check out the white paper there, bitcoin.org/bitcoin.pdf. George asking, how do the client know where the node is, where IP addresses are stored? Check out the Bitcoin white paper for more information on that specifically. Are there numbers to tell the size of the current Bitcoin that every node has to keep? How education estimates? Check out the white paper, Martin. If for anything really getting into Bitcoins, really check out the white paper. That's a really good place to start. There's documentation on other FAQs and stuff like that on bitcoin.org. So examples of how Delphi could participate in the crypto realm. I'm not sure if you mean cryptocurrency realm, Brent. In crypto realm, there's tons and tons of cryptography libraries for Delphi. And I've written cryptographic applications in the past, a number of them that use the various cryptographic libraries for different purposes. As far as cryptocurrency realm, you could have a wallet management system in Delphi. I didn't have showing examples of accessing the different APIs. I showed you the API endpoints, but they're easy to access from Delphi. So you could certainly create trading systems if you wanted to that bought and sold different cryptocurrencies based on their pricing at different points, right? So you could look at the price and say, oh my goodness, look, this cryptocurrency's dipping down, this cryptocurrency's going up. So let's buy, we'll do an exchange between this currency and this currency. You know, you can have automatic rules set up for that sort of thing. So lots of options you could do as far as participating in cryptocurrency. You could, so I showed the Pascal Coin example that is written in free Pascal. That could probably be easily rewritten in Delphi or ported to Delphi. You could write stuff in Delphi that extends that. You could create a miner in Delphi that uses the Pascal Coin libraries. There's infinite possibilities, really. Delphi is a general purpose language. It can be used for all sorts of things. How would you go about decentralizing the network in Delphi? Some sort of peer-to-peer using Indy? That would certainly work. You could totally do peer-to-peer with Indy. You could, app tethering is a decentralized technology. It does auto discovery on the local network, but you could certainly use that with fixed IP addresses across the internet. The Indy would be a great option for that as well. It's just a matter of doing some time to live hash networks type stuff. I think I've done sessions on peer-to-peer before, so there's lots of options out there. Is there any stats on what programming language is most used in blockchain? Um, gosh, that's hard to say. Bitcoin was C, C++. A lot of the stuff I've looked at is C, C++. You could certainly look through Wikipedia pages on the various cryptocurrencies and see what they're written in. I think Ethereum uses Python and Rust, if I remember correctly, but that I'm not positive that's the case. What is Delphi's place versus Java or C++? I haven't seen a lot of Java used in cryptocurrencies. Most cryptocurrencies are using more native languages because of the performance benefits, I believe. Like I said, I haven't seen much Java, but again, I wouldn't say that I've surveyed a wide swath of cryptocurrencies to see what languages they're using in that regard. Smart contracts are mostly written in JavaScript or a variation on JavaScript that I've seen. But there may be other systems out there that use Python, for example. Would Delphi, for some way, simplify using GPU as it has libraries for that? It certainly could. There are libraries for that. There are a lot number of libraries for other languages as well for using GPU. Any implementations for SHA-3 planned for T-hash? It's quite widely used nowadays. Nando, put in a feature request, quality.embarcadero.com. Just go to quality.embarcadero.com, file a feature request for that, provide information, justification for that. I don't know that there are any plans for that. I have not seen it on the roadmap, but you could certainly make a feature request for that. And there probably are third-party libraries already available for Delphi that do SHA-3. What's my personal opinion on Pascal Coin project? It's interesting. I haven't dug into it a whole lot. Actually, I'm kind of curious about it. I may end up running it. I'm not sure what the mining looks like on that one. So that's one thing that's interesting is the number of the other cryptocurrencies, like for example, Ethereum, and there's another one called Litecoin that's pretty popular, that were designed to be less computationally intensive to mine and optimized for CPUs versus GPUs. So the Bitcoin uses there's ASIC, everybody's using ASICs processors, specialized processors, GPUs, and stuff like that, which makes the hardware investment much more expensive for the mining. Whereas Litecoin and Ethereum are designed to be mined on standard CPUs. So I'm guessing PascalCoin might be in that same boat. I know most of the ones since Bitcoin have gone that route. So that certainly makes it a lot more appealing for doing some home mining these days, where it doesn't require you purchasing specialized hardware. So I certainly would look at PascalCoin some more. I don't know that I have any big opinions on that, or by all means, I'm not offering any investment advice either. If during mining you found a nonce, how can you be sure that nobody else has found the same? You can't, Casper. In theory, everybody in the network could find the nonce at once. The odds of that happening are very, very, very low. You're dealing with these huge numbers. That it's a huge realm of possibility, but there's no way to know for sure that someone else has found it or not. If two people found the same nonce, you would generate the same block. So you could have two different nonces that produced valid hashes as well, right? So there's two situations you could have happen. You could have two people find the same nonce that matches the difficulty requirement, and they would produce the same block. So I'm not sure if it splits the Bitcoin reward, the 12.5 Bitcoin, between those two people in that situation, or how that works. The other thing that could happen is you could have two different nonces found that generate that both meet the difficulty requirement. So there's two things that can happen. Part of it has to do with propagation through the network for how many nodes you reach first. So part of it would be what's your connection speed, what node you're connected to, stuff like that, as far as the propagation through the network. So to really understand that, check out bitcoin.org/bitcoin.pdf for the white paper, and that will really explain that in a lot more detail. Sergio says, I'm working on a wallet component for C++ using libbitcoin. We'll wrap them using Delphi classes later. Great, looking forward to seeing that. Andrew's asking, if there is one block created every 10 minutes with a nonce, how do mining nodes know when somebody else has found the hash? Or do I need to read the white paper? So it's broadcast to the network when someone finds it. So you're not going to know immediately, but you're going to know shortly after it happens because of the network communication, network propagation that it has occurred. You could certainly create a exchange in Delphi like Coinbase or the I can't remember what the website was, the cryptocurrency exchange website or compare website. So how do the miners get the rewards? Read the white paper, but essentially when you generate that block, it includes the transaction of those 12.5 Bitcoin into your wallet. So because you won creating the next block, you get to include that in there. Is Delphi used right now in any of the Hyperledger projects? Don't know, not familiar with Hyperledger. Frank just shared a link for SHA-256. Should be easy to translate. Great, thank you, Frank. Excellent insights and simple to handle. Thank you very much, Peter. And everyone uses the longest chain. Yes. If there is a conflict, then once the next if the chain forks at some point because two people generated different nonces that produced a valid block, then the next block, right? Whoever finds whichever chain, if we split into two different chains, whichever chain gets the next block, that one consumes the other chain, and the other chain dies off, and so everybody moves to the longest chain. So if that does happen, just hope that people on your chain produce the next block. So Pavel is asking how the difficulty in mining Bitcoin has changed each round. Is determined by the algorithm. The algorithm is defined as such that every 1,260 blocks or whatever it is, however many blocks it's set for, it goes through and calculates based on the average time of those blocks and adjusts the difficulty as necessary. So it looks at the time stamps between the last group of blocks and decides what the difficulty should be the next group of blocks. So you calculate only on the longest chain, correct? Roland's saying parts of the Pascal community want to change the hashing algorithm because they have a very big problem with the Ethereum dual mining, too high mining pool concentrations, and no incentive for other miners if not doing dual mining. They also have plan to have the developers participate in mining rewards in the future, but they are not very pro Delphi. Oh, well, good to know. Thanks, Roland. One thing about, I know a lot of people some people prefer Free Pascal over Delphi because of the, Free Pascal's free for open source projects, but the Bitcoin, something like PascalCoin totally could be done in the starter edition of Delphi, which is free. So it's free. There are free licenses available either way, and everything that you'd be doing with that would totally fall under what you could do with the free version. So Sergio is saying, I recommend the book Mastering Bitcoin for answers to all these questions. Yes. Great. Thanks for the recommendation. There are a lot of great resources out there. So if that's thank you for that, Sergio. Philip's asking, will Hashgraph make blockchain obsolete or just more suited to different applications? Hard to say. Blockchain's still a very early emerging technology, and as such, there are going to be other people that are like, oh, well, it has this flaw, so we're going to come up with a new solution. So both, Hashgraph and blockchain may both become obsolete in 10 years' time, and we may see something else that's a hybrid of those and something else altogether. It's hard to say what's going to happen in the future. Definitely believe, though, that this is going to have a big impact and it's going to have a lot of impact going forward. Whether or not, it's hard to say what it's going to look like in the long run, though. Is multi-threading a possibility? Yes, you definitely would multi-thread to improve your mining performance if you have a multi-core system. On GPUs are massively parallel, so you definitely want to be multi-threading, although it's different on a GPU versus a CPU. But if you're mining on a CPU, you would be wanting to use multi-thread so that you can use all the cores. If you're not multi-threaded and you only have one process running, then you would only be using one core, which would be 1/4 to 1/8 of the total processing power of the computer. Am I planning to do the webinar about blockchain in the future? Alex is asking. Possibly, if there's enough interest, I certainly could look at doing that again, doing more of that. Roland says, by the way, there's already a Delphi port of the current Pascal Coin wallet. I think Magno Lima on Google Plus has done one. Great. I figured that would happen. Are there benefits of using Delphi memory management for memory management, et cetera? It's hard to say. I mean, there definitely are benefits. It depends on what you're doing, comparing it to. There are pros and cons to any language, I guess. I'm not going to I don't know that I could say that you should be using Delphi over something else. I think that from what my understanding is, and I've talked to people that have done a lot more deeper dive into, if you're talking about free Pascal versus Delphi, there are different CPU optimizations and different language features available in both. The memory manager that Delphi uses is totally spacing the name of the memory manager that we're using, but it's open source and possibly available on free Pascal as well. The compiler optimizations are different between the two. I know there are some people claim that the free Pascal has a number of advantages in compiler optimizations, but I've talked to other people that have switched to free Pascal because they thought they were getting some advantage and later ended up switching back to Delphi because they found they were missing a number of compiler optimizations that they really depended on. So it's really hard to say what the overall advantages are because it's such a complex problem set to be able to quantify. What's my opinion on the major scalability issues with blockchain and hashgraph methodologies? So when I was mentioning PascalCoin, they maintain the flow, right? The last 100 blocks instead of all the blocks in the blockchain, which seems like that would be an advantage of scalability. You would need to have a snapshot, right? So you need to have a snapshot of the status of the ledger and then the last 100 blocks, and that would be a way to make it more scalable. It seems in my mind, that's what PascalCoin does, or at least according to their website, and that seems like a possibly good solution as well. It's actually something I was having a discussion with somebody and considered if you could do something along those lines where you'd have to keep the entire block. It would seem that you would want to have the entire block stored someplace, but at some point it wouldn't seem like you wouldn't need to go back that far to you wouldn't need to go back to the Genesis block to find out the current status. Blockchain Basics. Great, thanks. Sounds like a lot of you may have read more about blockchain than I have. It's always interesting because there's a huge amount out there, and certainly a lot you can learn and know. And so we'll definitely check out some of these books. And another one, great, thanks. A series of videos from Princeton. Thanks. Oh, EDX. Good to know. This has this free course on blockchain basics. Magno is saying, I also would like another over like that. I'll look to it. Mining with CPU and also GPU costs more money for electricity than you earn on Bitcoins, Frank's saying. So Bitcoins are interesting specifically because the electricity requirements are quite high, and that seems to be the biggest influencer on the price in Bitcoins. Because the Bitcoin network is so huge, your share, your portion of that is quite small. Your potential of generating this, your odds of generating a block and getting a Bitcoin are quite small, which means you're putting in a lot of effort for that. Now, I've heard that in some places the electrical power is much cheaper than others. So, for example, where I live, our energy is quite cheap because we're on hydropower. The majority of our energy comes from hydropower. But if you were someplace that had, solar power, or you had your own solar power panels and maybe something along those lines, and you had energy that you weren't using because of, it was just going to waste for whatever reason, then there's lots of potential that could be profitable for you to put that into Bitcoin mining. I've heard other people that are using their Bitcoin mining systems to generate heat because they're in a very cold climate, for example, right? And so then they're turning off their heater and running their mining rig, right? So there are lots of pros and cons for ways to make it profitable. Places like Canada, they're cold. Yep, exactly, Brent. Glad to hear that I did a good job explaining it, Roland. Thank you. And yes, the more you run the graphic cards, the GPUs doing the mining processes, the earlier it's going to wear your graphics card out cheaper, or quicker, certainly. Sorry your brain hurts, Andrew. Okay, well, I think we're towards the end of the questions here. Hopefully I got through everybody's questions. If not, you can certainly follow up with me, or really check out the bitcoin.org/bitcoin.pdf, or a number of the resources other people had shared. The Princeton has a video series. EDX has a video series. A couple of the books that were recommended here. There's a lot of books out there on the topic, a lot of videos out there on the topic, a lot of blog posts and websites and stuff on the topic. So certainly lots of opportunities to learn more about this. Hopefully you all go out there and learn more about blockchain, and you can teach me some stuff about it next time. I certainly don't claim to be a complete expert on the subject. I am available via email, Alex. It's jim.mckeith@embarcadero.com. It was up there at the beginning of this, and you should be getting email as a registered webinar attendee from me as well. I don't know that I'm going to be able to provide many more answers beyond what I've given today, or that I have pointed you towards resources, but certainly feel free to follow up with me if you believe that is a good idea. And with that, I think we'll go. Great. Thank you so much. Thanks everybody for joining me, and we'll see you all next time. Take care. Bye-bye.